Welcome back, Money Circle fam. Hope you guys are having a good day. Today what we're going to talk about is Tesla has earnings coming up. And the big question on every investor's mind is, should you buy Tesla stock before earnings on Tuesday, or should you wait until after the earnings come out to start buying Tesla stock again? So we're going to talk about some real numbers, some historical data, and then we'll go over if you should buy them now or if you should wait until later. But before we get into all of that, my name is Rick. I've been in the finance world for 10 years, and I help you better understand money so you can start building wealth for yourself. And if that's something you're interested in, make sure that you smash that subscribe button while we start talking about the question on everybody's mind: should you buy Tesla stock now? Let's get into it. Tesla is set to release their quarterly earnings for the first quarter of 2025 after hours on Tuesday. And this isn't just a release of financials. This is a big market moving event between the expectations of Wall Street and some of the announcements that Elon tends to make during these quarterly earnings. It tends to make ripples throughout the entire stock market. And so the question becomes, with everything going on, not only with the Tesla stock, but everything going on with Elon, some of the publicity he's been getting, whether it be good or bad, it's left a lot of investors asking, should I be buying this stock before earnings come out, or should I wait until after earnings so that I can start reaping the rewards of what should become an eventual rebound of the stock? Let's first get into some of the pros and cons of buying Tesla stock before they release their earnings on Tuesday. So one of the first major pros is you're getting in before a potential rally. So obviously these earnings come with expectations. And if they beat those earnings expectations, historically, what ends up happening with Tesla stock is it gains between 5 and 10% leading up to and after they report earnings. So for those people that are getting in early, they're going to be rewarded with a gain of between 5 and 10% in the days leading up to and after. So you're beating everybody else flooding into the stock. Next is you're going to benefit from the positive sentiment buildup. So there's always a lot of hype surrounding Tesla stock. Why? Because, they are the world's leader in EV vehicles. So everybody looks to them towards what the global pulse is on EV vehicles. So if they're doing well, it tends to have a positive impact across the entire EV market. And so if they can deliver on this positive market sentiment, that creates more believers within the stock, which means if you got in early, not only are you reaping the rewards of the positive expectations and them beating expectations, but now you're also playing on market sentiment and buildup, meaning that more hype is going into the EV market, more hype is going into Tesla, and you've already been invested into the stock, so you're going to reap even more of those potential gains. Now let's talk about a couple of cons. First is if you end up buying Tesla stock and it doesn't beat expectations, and in fact, it delivers some bad news between, we know everything going on with Elon, but also we know that right now consumer spending is not doing too hot because of inflation. So if they don't end up hitting expectations, what tends to happen with Tesla stock is you see a big run up before earnings come out. After earnings come out, if they don't hit those expectations, you're going to see a sell-off. So the hype is going to be built up and you might be buying into that hype, but then there's going to be a sell-off afterwards because, earnings didn't go the way that investors thought they would. Couple that with potentially bad news of everything going on with Elon and the negative sentiment that he has with the current administration, and you could be in for a lot of volatility, but also a potential short-term loss. So the way to think about it is a buying a rumor and selling the news type idea. You're buying rumors of what could potentially happen within the stock, but then there's going to be a huge sell-off once the actual news comes out, which is never a good thing for your stock portfolio. And if earnings end up being bad, you could see a bigger sell-off. And the reason why is because the market already has some positive expectations priced into the stock. So if they don't deliver on those positive expectations, and the earnings end up being drastically different than what expectations actually are, that could lead to a big sell-off, which means an even bigger potential for loss. So there's a lot of volatility within the stock based on these earnings. So what does history say about Tesla stock price after earnings? I'm going to show you this report here, and I'll read it off to you. So of the last 8 reports, 4 times the stock price dropped after earnings came out for Tesla. 3 times it rose, and 1 time it was completely flat. So we're almost 50-50 when we look at the last 8 earnings reports. Now, it's also important to note that the average percentage that we see for movement based on all of those reports is a 7.4% rise or fall, depending on what exactly happens with earnings and expectations. So you can see that there's a lot of volatility in whatever happens with this stock. So that's why this can be a high risk, high reward, or it could be a high risk and potentially a devastating loss for you as well. So you want to make sure that you're playing this really close to the cuff when it comes to these earnings. History for Tesla stock tends to lean more bearish post earnings. So what that means is you want to create a strategy for yourself that's going to play to that. So if you're a short-term investor, here's what that might look like. You may wait until earnings come out before making your decision if you're going to buy more stock. And the reason why is because that's going to reduce the risk for you. So waiting until after earnings and then not participating in that volatility is going to be a huge advantage for you. Now, if you're a long-term investor, waiting to buy the dip is going to be your ultimate strategy, which means we know that there's always a build-up toward earnings. Now, we also know that even if earnings do come out positive, there's going to be a sell-off. So that means that you're in a position to wait and see. And as soon as earnings come out and the stock starts to dip, whether that be in the days or weeks after earnings come out, you're going to buy the dip, which is going to lead to a long-term growth potential for you and your portfolio. So let's talk about some of the pros of waiting until after Tesla's earnings to buy stock. And there's really 2 main ones that I want to focus on. The first one is you're not buying based on speculation. A lot of times, people that are buying into Tesla stock before earnings actually come out are expecting that the numbers for earnings are going to be in alignment with expectations or beat expectations. But obviously, you don't know what that answer looks like. The market has what they believe is going to happen with earnings, but that doesn't mean that that's the actual data and the actual facts. So by waiting until after earnings, what you're doing is you're playing to the strength of what the real data is. So now you can make an educated decision of if you want to buy the stock or if you want to wait until the sell-off happens and then buy when it's lower. So you're reducing that risk and you're actually using real-time data to make a more educated type decision. Now, the other thing that you're doing is you're building your portfolio with more confidence, meaning that when the data actually comes out, you know whether you should be buying now or waiting until later. So that's creating more sense of confidence, but it's also creating a better entry point for you in buying the stock, which means that you're going to maximize your potential return based on actual data and not just speculation. So you're cutting out this idea of what investors think, and you're making your decision based on here's what the actual facts are. So you're actually creating more of a positive type investing scenario for yourself. And there's 2 main cons that we want to discuss and talk about for buying Tesla stock after earnings actually occur. And that first one is that you are missing out on the major jump that tends to happen with Tesla during the build-up stage of earnings. So as we discussed earlier in the video, usually Tesla earns between 1 to 5% in price leading up to earnings. So if you're waiting until after earnings, you're missing out on that 1 to 5% gain that historically we've seen for Tesla stock. So if that happens and Tesla ends up having positive earnings, you're not going to recapture that 1 to 5%. Instead, the stock is going to continue to run and you will have missed out on that 1 to 5%. The other con is if Tesla ends up beating earnings, the price could gap up and never come back down, which means if you tried to build your investment strategy to buy the dip, it may not dip. So it's going to gain that 1 to 5% pre-earnings, but then post-earnings, it could continue to gap up and gain another 5 or 10% in the days and weeks after earnings, which means that you never had a potential to buy the dip, so you're buying in when the stock is already on a buying type trend. So you will have missed out again on that potential buying opportunity and getting in on the dip, and you're sacrificing some of those short-term gains. So waiting also may not be the best idea for you either. So how should you play earnings? Well, that's really up to you as an investor. So if you're a short-term type investor, waiting to see how earnings goes might be in your best benefit, because obviously you're playing to what the market's reaction is to the earnings report. You don't want to buy in too early, because if it ends up not doing well for expectations, obviously you're going to see a huge sell-off. If you're a long-term investor, however, and expectations end up being good, that's going to be a good thing for you. So how should you play it is really dependent on what type of investor you are. Me personally, I'm going to do a wait and see, where I don't know how earnings are going to go. My feeling is they probably won't go well, so it's going to create a buy the dip type scenario. But again, that means I could be sacrificing some gains if they end up beating expectations. But that's just my specific strategy. Let me know what your strategy is in the comments below. And I want to thank you guys for the support that this page has been getting. I enjoy talking about things like this and really just gauging what the pulse is on the market as a whole. I'm an investor who's learning more and more every single day, but I like to share my experiences with you and create a transparent type environment. So if that's something that you enjoy and you like getting different perspectives, make sure that you hit that subscribe button and join the 150,000 community members that we have that share experiences like this all the time. Other than that, thank you guys for tuning in and all the support that this page has been getting. I hope you have a great rest of your day, and we'll see how Tesla earnings go.